Hi, good morning, everyone. We shall start the webinar for today. So, good morning, all the participants. I'm Sean from Client Investment Specialist team. I'm your speaker for today's webinar. The topic for today's webinar is debunking the myth of net asset value (NAV), which normally we refer it to as price in unit trust investment. So, are you okay with my speed? So, can you hear me clearly? So, if okay, can you type yes for me? So the audio, everything is okay, right? So along this webinar, I will mute all the participants so that you can have better audio experience for this webinar. So when this webinar going on, if let's say you have any question, you may type your question in the chat box and then I will reply your query accordingly. So next slide. So this is our disclaimer. So you may spend some time to read the disclaimer. So in short, actually the disclaimer means whenever you see any fund name appear in my slide later, it's not construct as an offer to buy and sell the particular unit trust fund, okay? So you may have a read and then while waiting for other people to join. So just a gentle reminder for the new joiner. So please mute your mic so that other people will have better audio experience. So Michael Chong, I see that you claim that you cannot see the screen. Is it okay now? So this is the agenda for today's webinar. So I will go through number one, introduction of Fund Supermart One platform. Number two, common misconception of NAV. Number three, how is the unit trust fund being priced? And number four, bust a myth of NAV in unit trust investment. And number five, I will summarize the key takeaway for today's webinar. And we will have a simple quiz at the end of the section to test your understanding and knowledge on today's topic. So before we proceed to the next slide, so may I know how many of you actually is new to Fund Supermart One platform? Can you type +1 for me? Anyone is totally new for our platform? Or most of you actually are existing investor? Okay, so I think if let's say no one reply me, I think most of you is existing investor, right? So it's okay. So I will just go through very fast a quick introduction about our platform. So Fund Supermart One platform actually is distributor of unit trust investment. So actually we act as the middleman in between investor and various fund house. Currently we have 30 fund house partner allow us to carry more than 593 funds in our platform right now. So I think most of you who like to travel will probably know Agoda and Booking.com. So you can just imagine that actually Fund Supermart One platform, we are the Agoda or Booking.com within the unit trust industry. So investment through Fund Supermart One will allow you to compare the fund among most of the fund houses in Malaysia unit trust industry. So Fund Supermart One website is equipped with tools and information that could help navigate investor in their investment journey. So you can invest in 30 fund houses unit trust fund in one single platform. So beside unit trust fund, actually our platform to carry different investment products as well, such as PRS fund, which means you can, for PRS fund means you can enjoy a tax relief of 3K when you invest in this private retirement scheme. And then we do have the EPF investment as well, which means you are able to utilize your EPF account one saving and invest into the unit trust fund. And then we do have a retail bond. So for information, actually Fund Supermart One platform is the first platform in Malaysia that introduced retail bond. So previously bond, the whole lot bond actually is only applicable or open for sophisticated investor only. So now actually retail investor is allowed to buy into the retail bond, and you can start with as low as 1,000 only. And then we do have corporate bond as well. Corporate bond means those open for sophisticated and investor, and most likely, normally the bond size is start from 250K per lot. And then we do have managed portfolio as well. So managed portfolio means for those investors that they do not want to manage the unit trust investment themselves, actually they can consider managed portfolio. There will be a portfolio manager who help you to monitor, buy and sell and switch on behalf of you. And then lastly, in Funds One platform, actually we do offer insurance product as well. So conventionally, bank is the one that carry the role of distributor, the one that in the middle. So, but in this technology era, more and more investors actually are looking for an online platform that fulfill their investment needs. So that's where we assist to help investors. So being an investment platform also means that actually we are regulated by Security Commission Malaysia to deal in unit trust fund. So we are regulated by FIMM and Bank Negara as well. So Funds One is the online distribution arm of iFAST Capital Sdn Bhd, which means Funds Supermart One actually is our platform name, and you can understand it as our brand name. While iFAST Capital Sdn Bhd is actually our company name, which hold all the investment trading license as per below. So iFAST Capital Sdn Bhd is the wholly owned subsidiaries of iFAST Corporation Limited, which is our mother company listed in Singapore Exchange main board. So Funds One Malaysia platform actually we started in 2008, and then this year actually marked the 12 years anniversaries of Funds Supermart One in Malaysia. So currently, we have several licenses from Malaysia regulator to deal in unit trust fund and to deal in private retirement scheme and to offer investment advisory service, which means it's a insurance product, and then to deal in OTC bonds and to offer fund management services as well. So next, we'll proceed for today's topic. So I would like to discuss the common misconceptions of NAV. And NAV means the price in unit trust fund investment. So before we start, I would like to ask one question to all the participants. So do you look for lower NAV or price when you select a unit trust fund to invest? If yes, maybe you can type +5 for me. If no, then maybe you can type +0. So can you all type and give me some response? So I can see that CLT, quite some of the investors, actually they are looking for NAV, right? And some of you is no. So it's okay. Thanks for the response. So this is the most of the frequently asked question that we commonly receive from our investor regarding NAV. So normally, investor will ask for the first one, "Hi Sean, actually I'm looking for few Malaysia fund. So, but the Malaysia fund NAV, actually they have vary from maybe one of the fund is 1 ringgit and the other fund is 50 cent. And then another fund will be 33 cent. So I think the fund with 1 ringgit actually is pretty expensive now. So I should pick the fund that price 33 cent to buy in cheaper variation and wait for the fund price to appreciate. Is it okay?" So this is a common question that client asked me. So I categorize under the first misconception. Is it lower NAV equal to value buy? And then second question. Normally, client will ask me when I suggest some fund to them. "Hey Sean, why you ask me to go into this fund? This fund already, the NAV for this fund is already all-time high in 3-year period. So is the price too expensive to go in right now?" So I will categorize this under, is high NAV equals to limited upside potential of the fund? So the third question, so normally client feedback to me, the launch NAV of the fund actually is 50 cent. But when the client check in website, the NAV for current NAV latest one is 40 cent only. So by right, the fund should make 20% losses by right. Actually, a very simple calculation. But why when they check the past performance of the fund, actually the past performance of the fund is showing positive return since inceptions. So is our website error? So I categorize this question under why the latest NAV does not reflect the past performance and fund return. So lastly, mostly for clients that have experience in stock investment, they would tend to ask this question. So will the unit trust NAV being pushed up if there are many investors invest into this fund, just like stock investment? So I believe most of you have go through the same scenario or have the same doubt as above. So let me reveal the myth to you in my latest slide. So before we proceed further, I think we should understand the term of NAV first before we continue our webinar so that we can have a better understanding in later slide. So this is a definition I copied from Investopedia. So let me read the definition for you. So net asset value, at which is NAV, represent a fund per unit market value. It is the price at which investor buy a fund unit from a unit trust fund company and sell them to a fund company. So this is derived by dividing the total value of all cash and security in a fund portfolio, less any liabilities, by the number of shares outstanding. But NAV computation is undertaken once at the end of each trading day based on the closing market price of the portfolio security. Sound very complicated, right? So you just need to remember the keyword over here. So I will further explain the NAV in next slide. So the keyword here actually is the NAV means it is a fund per unit market value. And then the NAV computation, which is when fund manager calculate the NAV, actually NAV only have one price per day. And then the price will be the market closing price. So, so next, we will learn how the unit trust fund being priced. Unit trust investment actually is different from stock investment. So unit trust only have one price per day, which is the market closing price. We call it NAV, net asset value. So the purpose of NAV is to determine how much one unit worth when you buy or sell the fund in each trading day. So within the NAV is just for you to value what is the price for you to buy or sell the fund in each transaction day. So you may refer to this formula, the second formula. Actually, this second formula summarizes the definition in the previous slide. So NAV is asset minus liability divided by number of unit issue. So asset here means the market closing price of the underlying asset that the fund manager invested in, while the liability is the average cost the fund manager manage your money or manage the investor money in the particular unit trust fund. So generally, the cost is known as the annual management fee. So the prorated annual management fee will deduct daily, which means it will deduct every day when fund manager calculate the NAV. Then the fund manager will get the net asset of the total overall investment value, and they will divide the total number of unit issue. So the total number of unit issue here means how many units circulate among investor as at today. So the number of unit issue will be vary from time to time as each investor will buy or sell the unit trust fund every day. So this is the formula how the fund manager calculate the latest NAV. So beside unit trust investment, is unlike stock investment. So in stock investment, actually you can determine what price to enter. But for unit trust investment, actually you cannot determine what price to buy. Why? Let me further explain. So once you understand how fund manager calculate the NAV, then it will be very easy to understand why unit trust fund is priced based on forward pricing. So for your information, Fund Supermart One platform, our cut-off time for transaction actually is 3 p.m., 3 in the evening every day. And then if you transact any unit trust before the cut-off time of 3 p.m., you will get today NAV. But if you buy or sell the order, if the buy and sell order transacted after the cut-off time of 3 p.m., then the transaction will capture on next day NAV. So, okay, now, if you buy unit trust fund today, will you know the price you buy today? The answer is no, right? Because now you can imagine that the cut-off time of transaction, the cut-off time of our platform transaction is 3 p.m. But the market closing time actually is 5 p.m. in the evening. So as I mentioned before, unit trust only have one price per day, which is the market closing price. So which means you won't know the NAV you buy today until the fund manager calculate the market closing price which were available after 5 p.m. and normally the price will announce in 1 to 2 days later. So in summary, forward pricing means when you buy the fund today, but the price will make known to you in 1 to 2 days later. So normally for local fund, it will be have 1 day lag time for in order for you to know the price for today. Which means if let's say today price, it will be announced by tomorrow, which means 1 day lag time. And then normally for those foreign fund NAV, it will have 2 day lag time. Why? Because foreign fund invested in different country. So different country actually they have different time zone. They will be encounter different time zone. So for example, US fund for Malaysia actually is 13 hours ahead of US time zone. So when US market close in US time 5 p.m. in the evening, 5 p.m. in US time. So actually the 5 p.m. in US time actually is Malaysia time 6 a.m. in the next morning. So this is the reason why for foreign fund will normally have 2 day lag time because when the fund manager calculate the NAV, there will be a 1 day lag time to announce. And then the other day is it will be contributed by the different time zone. So this is a very simple illustration on how unit trust fund being priced. Let's take example that the daily total asset value is 1 million, which means the stock holdings or the underlying asset that the fund manager invests in is worth 1 million today as of the market closing price. So after minus all the average or prorated liability of the fund, which I highlighted in the gray area, the daily net asset value is as per this, 989,500. So after the fund deducted the cost, the liability, so this will be the net asset value. So if the fund circulate unit is 1 million as of now, then the price, the NAV price for this fund is 0.9895 for today. So because they are using this amount divided by this amount, then they will get the NAV. So from this calculation, if the liability remain constant, which means the cost in this gray area remains the same and the unit remain the same, you will notice that if the daily total asset value increase, the NAV will increase as well, which means if the underlying asset that the fund manager invests in make profit or the stock price increase, then it will cause the NAV to raise as well. So besides, we also can conclude that if liability keep increasing, if the amount here is keep increasing, it will affect the performance of the unit trust fund as well. Because if the amount here increase, then machine you will have the lower NAV when they calculate when the fund manager calculate the NAV. So since we are at this slide, I would like to ask one question. Is anyone know if there are many investors start to invest into this single unit trust fund? Will it push up the NAV or will it push up the price of this unit trust fund or not? You may type yes or no to respond in this chat box. Okay, no, right? So the answer is correct. The answer is no. So many investors who have the stock investment experience will ask why. If many people invest in a stock counter, normally it will help to push up the stock price. But yes, this is true, but for the stock investment. But in unit trust investment, the increase of the NAV is contributed by the capital appreciation and dividend payout of the underlying asset, which is the stock counter or the underlying asset that the fund manager invests in. So in unit trust fund, whenever there is a fresh investment into the fund, normally the fund manager will park them under the cash holding first while waiting for the investment opportunity. So which means, for example, if let's say today there's one wealthy client, they put in 500,000 into this fund. So normally fund manager would not straight away invest the 500,000 into the stock market. Normally they will park in the cash. So but it will still contribute to the increase of the total asset value here. So if let's say the customer park in 500,000, then the daily total asset value will increase to 1.5 million. So, but please remember that on the other hand, the total outstanding unit will increase according to the new buy as well. Because when the customer put in 500,000, the fund manager will need to create the create the additional unit to this particular investor as well. So just imagine that if the total asset value and the total outstanding unit increase in tandemly, so actually it won't be affected the NAV. So still remember the definition of the NAV, right? The NAV is to make it easier to use for value and transaction in the unit trust fund. That's why the worth of one unit would not increase just because of many people buy into the unit trust fund, because additional unit were created in associate with the new buy. So hope this explanation is clear for everyone, right? So if okay, then we will proceed to next slide. So let me reveal the common myth or misconception of NAV when you invest in unit trust fund. So for first, for the first misconception, is lower NAV equal to value buy? The answer is no. So let me explain by using this very extreme example. So you may refer to the table here. Fund A and Fund B, actually they are invested in exactly the same underlying asset, which means they are invested in the same stock counter over the same period of time. So for example, both fund manager bought bought our company stock in the same day. So fund manager of a fund A is actually they are very normal. He priced the NAV as 50 cents because he want to attract or induce more investor to buy his fund. But fund manager for fund B is a bit special. He priced the NAV as 50 ringgit. So you will see that the NAV per value as of 1st of January 2019 for fund A is 50 cents, and then for fund B is 50 ringgit. So if let's say I invested 10K in both funds, so I will get 20,000 unit in fund A, while I only get 200 unit in fund B because the NAV price at 50 ringgit. So if both of the fund invested in the same underlying stock, which is the example that I used just now, iFast, our company stock. So if iFast stock make a 20% return in 2019, then actually you will see the NAV for fund A and fund B, it will increase by 20% accordingly. So the investment value for my fund A and fund B actually is the same. It's still the 12,000, regardless how low the NAV I bought in fund A or how high NAV I bought as in fund B. As long as the underlying asset make profit, actually the NAV for the fund will rise or go up by the percentage accordingly. So which means the fund A with an NAV of 50 cents doesn't mean that it is cheaper than a fund B priced at NAV of 50 ringgit. So is everyone clear? So let us go through this case study to understand more. Okay, we have two funds here. Invest in Malaysia small cap stock. I know you all try to guess what is the fund name of these two funds right now, right? So, but please remember the disclaimer of my slide just now. The fund name displayed here actually is not constructed as the advice to buy or sell any fund, okay? So let us focus on the latest NAV price of these two funds. So the one with longer name, we can name it as the fund A, and the bottom one, the second one, we name it as fund B, okay? So now based on the price, can anyone tell me that which fund is a value buy? Maybe you can give me your answer by type fund A and fund B to vote your choices. Is fund A is a value buy or fund B is a value buy based on the price? Ah, okay, so let's proceed to the next slide and see who got it right. So in this case, actually fund A with higher NAV actually performed better than fund B with low NAV over the past 10 years. So actually, got some investor actually answer it correctly. We cannot determine which one is value buy just based on the NAV only. So in conclusion here, in a very simple case study, we know that NAV actually is irrelevant while making any investment decision. I hope you all understand by now. We cannot determine the fund valuation attractiveness solely based on the NAV only. Instead, we should focus on the attractiveness of the underlying market exposure, the fund manager expertise, and the investment strategy of the particular unit trust fund. So this is the second misconception. So in unit trust investment, fund manager will buy and sell for the stock holding with the pool of fund available. As you all know, the appreciation of the underlying stock price, it will contribute to the increase of the NAV. So fund manager, they might have already take profit for the stock, which they feel trading at premium, and use the fund or use the realized profit to seek for another better investment opportunity in another stock counter. For example, if a fund manager buy public bank share or public bank stock 3 years ago, and the share price already went up by 50%, which means the 50% gain is already reflected in the unit trust fund NAV as well. So the fund manager might sell off public bank share if let's say they think that the stock is already trading at very premium. And then the fund manager may use the sale proceed or the realized profit to invest in more potential stock counter. For example, our company, IFAS share. So in this case, if IFAS share continue to go up, to rise, the mutual fund, that particular unit trust fund, the NAV may continue to perform or the NAV may continue to go up regardless how high the NAV is as a result of fund manager expertise in stock picking. So therefore, the high NAV will not limit the outside potential of the fund as fund manager will buy and sell to change the underlying asset from time to time, depend on the market timing. And then they will also sell off and take profit of the stock that actually already trading at premium, which means it's already expensive. And they will use the money to invest into another potential stock counter. As long as the stock counter he picked is making profit, then the NAV of the fund will continue to go up. So it explains that the high NAV actually is not equals to limited outside potential of the fund. So the third misconception of the NAV. So I believe some of you might experience below scenario. When you research for the fund, some of the fund price when the first launch actually is 50 cents. But when you check the latest NAV, maybe its price has 40 cents. So by right, it should be making losses because launch price is 50 cents and then the current price is 40 cents. But when you check the past performance, the fund actually is making profit return. Do you know why? Actually, it is due to the adjusted NAV, which I highlighted here. So adjusted NAV after the declaration of the income distribution, which we normally call it dividend, or unit trust or unit split exercise. So the net asset value of a unit trust fund is adjusted accordingly to the dividend payment. So simply put, the adjusted NAV is the net asset value of the mutual fund adjusted for the dividend payment. The reason why the net asset value need to be adjusted is because the NAV is reduced by an equivalent amount to the dividends. That's the reason why for some fund, the current adjusted NAV might seem lower than the launch NAV, but yet the fund actually has a positive total return. So let us go through a case study to understand more. So I take TA Global Technology Fund as example. As I understand, a lot of investors asking about this fund recently. So you will notice that the latest NAV that I capture, the NAV here, I capture when I'm preparing the slide. So it's 0.534. So you may refer to the fund info. Actually, the launch date of this fund is in May 26, 2011. So which means it is almost 9 years from today. So the launch price is actually 50 cents. So if based on the information available here, does it mean that the fund only makes 6.8%, the 0.534 now, and then the launch price is 50 cents? Is that possible? Since started 9 years, just make 6.8%? No, right? So let us go through to the next slide to see what is the fund return. So actually based on the cumulative performance, the fund actually made 230.4% since the fund inceptions. But why the latest NAV is just 0.534 only? Why the NAV is only 0.534? Since the performance here stated that since started, actually they are making 230%. It's quite a lot, right? So because the fund manager has been declared 6 times unit split historically. So okay, just an additional info for you all. You will notice that the date of the unit split declaration is actually not the same. So you can see they will jump 2 years and 1 year, 1 year, 1 year, then 2 years, and then the mass is different as well. So that's mean that the fund manager actually has the full discretion as in when they want to declare the dividend payout or unit split. So when the fund undergoing the unit split, the NAV of the fund will reduce accordingly. That's why the fund, the latest NAV as of now is still 0.5 something. So for example, for the latest unit split of 1 to 5, the very latest one, which means for every 5 unit of the fund you hold, you will actually get an additional 1 unit. So which means the NAV of the fund will drop 16% accordingly by using this formula, 1 divide 6. So last month, actually we did a webinar with the topic of dividend in unit trust investment. And then I have also explained the dividend myth in last session. So I will not touch too much in this webinar. So if you miss the webinar, you may email to us and request for the recorded for the past webinar. So I believe most of you already understand how NAV being calculated and how NAV being priced. So I will summarize the key takeaway for today's webinar. So number one, NAV actually is totally irrelevant when investors select the unit trust fund for their portfolio. So investors should not determine the valuation of the fund, whether expensive or cheap, by just looking at NAV itself only. The key takeaway number two, NAV is actually just represent the sum or the value of total underlying asset of the fund owned. So the NAV will change daily, which means they will only have one price per day, which capture the market closing price. And it does not trade like the price of stock. So when you invest, normally when you invest in stock, you will need to determine what is the unit that you want to buy. For example, I want to buy one lot, 1,000 unit. So then you will just base on the stock price and determine how much that you want to pay. But when you invest in unit trust fund, it is totally different from stock investment. You will need to determine what is the amount, what is the investment amount you would like to invest. For example, if I would like to invest 2,000 in this unit trust fund, then the unit allocate for my investment actually will be in decimal point. So the third takeaway for today, investor actually should focus on the attractiveness of the underlying market exposure, investment strategy, and experience or past performance record of the fund manager instead of NAV. So the best deal for an investor actually will come from a unit trust fund that has higher NAV appreciation. So I repeat again, the best deal actually is come from higher NAV appreciation, not higher NAV, higher NAV appreciation, which means better performance or returns of the funds. And at the same time, the fund also has the higher Sharpe ratio compared to its own peer. Sharpe ratio means the risk and reward ratio when you compare the unit trust performance among the same fund. So, and thirdly, with a lower standard deviation. Lower standard deviation means the fund with lower volatility ratio, which means the fund is more resilient compared to its peers. So as conclusion, the selection of unit trust fund should never depend on the NAV itself without considering other factors. So I would like to conclude today's webinar with this quiz. Whoever that answer correctly and fastest, actually for today, I only prepared 3 questions for you all. So I will pick 2 fastest participants. And then the term and condition for this quiz is, if let's say you have won the first quiz, then actually you might give the chance to other investors. We should every single participant, you have one chance to win the token. So I will announce the winner on the spot later, and then my colleague will help to PM you in the chat box. So kindly provide your full name, contact number, and email address in the chat box, and then we will email you the token for this quiz later on. So the token that we prepare for today actually is 0.5% campaign code. So the campaign code will valid for in 6 months time. So the 0.5% campaign code will allow you to perform one transaction, one purchase order, which means you can create multiple funds in one PO and then enjoy for 0.5% surcharge. So is everyone ready for the quiz? So the first one, which year Fund Supermark 1 first started in Malaysia? Okay, so CLT, and actually the answer is 2008. So CLT answer it correctly, and Mr. Kam take 1 answer it correctly. So my colleague will PM both of you. So I will draw a borderline here. So stop typing anything first. So we will proceed for next question. Can investor determine what price to buy when invest in unit trust fund? Yes or no? Okay, this one is very simple, right? The answer is no. So as I explained previously, unit trust is priced based on forward pricing. You will not know the NAV for today's transaction until 1 to 2 business days later. So as fund manager need some time to calculate the NAV based on the market closing price and publish the NAV. So let me see. The first two is Mr. Tan and I think it's Mr. Tu. So our colleague will PM you. So let me draw a borderline. Okay, so actually third question is a bit tricky. So we should pick a fund with low NAV to buy in cheaper valuation. Is the statement above true or false? Okay, the answer is false. NAV actually is irrelevant, as I explained just now, in determining the valuation of the fund. So investors should focus on the valuation of country allocation that the fund manager invests their underlying asset. How do we determine the attractiveness of the underlying country of the fund that the fund manager invests in? Actually, we can refer to the index for the particular markets to determine the current valuation. Beside, actually, Fund Supermarket One research team, we also do publish the country or region valuation data monthly. Actually, you may refer to our website in the column of the market star rating to understand more of the attractiveness of the particular market. So let me have a look. So, okay, the JT will be the winner. And because you user already win, so the next one will be Ron. So Alan Chong, because you answer no, so that's why you cannot get the. So because the answer, the correct answer will be false. So it will be JT and Ron for this one. So do you all still have any question on NAV? If not, then I would like to thank all of you to participate webinar today and hope you gain some insight from us. So if you have any further question, feel free to type your question in the chat box and then I will try to reply one by one. So you may refer to this slide for our CIS, Client Investment Specialist Team's email address. If you have any question on investment, you may email to us. And then if you would like to have the recorded webinar for today or last month webinar, the past webinar, you may also send in your request through this email. So for new investor, if let's say you are interested with our platform, actually you may open up an account with us for free by scan the QR code over here or visit our website through